All right. So Fibonacci is a very important tool when it comes to getting into trades, right? Getting your entries. Because how does price move, guys? Move, price moves, price move up or down. And usually when you see an impulse move, right? At the end of this class, guys, we're going to go into the chart and we're going to use Fibonacci to actually analyze several pairs. We'll analyze USD, JPY, and dollar index, and a couple of other assets at the end of this class. So stick around. Okay. So when price makes an impulse move, either for a buy or a sell, what you want to do is that impulse move is what you want to trade, You want to trade in the direction of an impulse move. An impulse move is when you see a huge buy candle. That's an impulse move. Okay. When you see a huge sell candle, that's an impulse move. You want to trade in the direction. Like the last class we had, we talked about trends. We talked about how that a trend is your friend. One of the ways to know that know the direction of a trend is by an impulse move. So when you see a huge buy candle, the trend is probably changing in the buy direction. When you see a huge sell candle, price is likely changing into the sell direction, right? So that's the reason why understanding trading impulse moves is very important. But then an impulse moves also happens when there is a news event. Okay, we'll go to the chart after we go through this. We'll go to the chart so you see all these things. Now, when a news event happens, price moves in a particular direction depending on the impact of that news. If the news is very high impact, you will see the price will just move heavily in a sell direction or a buy direction, depending on how the news, how impactful, how surprising to the market the news is. So when the news is of a huge surprise to the market, you will see the way the market will respond to it very heavily. We've seen a lot of surprising events recently, from the later part of last year into even early this year, even this year, we've seen a few surprising events, and price really made huge moves, right? So when price makes that move, you want to be able to trade in the direction of that move, on that trend. How are you going to get your entries? If you see candles just moving heavily in one direction, you don't want to jump in, because there's such a thing called retracement. There's such a thing as retracement. So as a smart trader, what you want to do is that if you are going to buy, if price has given you a direction and tells you that, oh, we are buying, you don't want to jump in at a very high price. Remember, when the market is telling you we're buying, it means that the market is already at a higher point at that time. By the time it tells you we are buying, price is already at a higher point. You don't want to jump in at that higher point to buy. What you want to do is you want a discount. This is just an analogy. You want a discount. You want price to discount that move so that you can get in at a much better position, at a much better price, so that you can maximize the profits. And this is where Fibonacci is such an important tool. Fibonacci is such an accurate tool when it comes to predicting retracements, when it comes to understanding retracements. And then retracements are where you enter. That's where, when you're seeing a buy move going, where are you going to enter the trade? You don't jump in at a high price. You want to see a retracement. That's where Fibonacci gives you precise entries. Okay? Precise entries. That's the importance of Fibonacci. So Fibonacci most of the time will help you easily draw support and resistance structures on the chart. But then these are not just support and resistance structures. They are basically, there's a lot of mathematics involved in these numbers. And surprisingly, they are very accurate. They are very accurate. So in this class, we're going to be understanding how to use them, what mathematical numbers are behind this Fibonacci, right? What mathematical numbers are behind this Fibonacci? Which one of those numbers are relevant? How do we use them? And how do we customize our charts in order to use this Fibonacci Fibonacci 2. Now, guys, you can use Fibonacci on TradingView if you're trading on TradingView. You can use Fibonacci on MT4 or MT5 on your laptop, on your computer. You can also use Fibonacci even on your phone, on MT4 or MT5 on your phone. I use Fibonacci for all of these, right? So whether you're on your phone, you can use Fibonacci. Whether you're on MT4 for laptop, you can use Fibonacci. Whether you're on MT5 for your computer, you can use Fibonacci. If you're on TradingView also, you can use Fibonacci, all right? Give me 1 minute, guys. Okay. All right, so let's get started. All right. So overview, Fibonacci retracement is a method of technical analysis used in forex trading to identify areas of support and resistance in the price of a currency. So Fibonacci is an easy tool for drawing support and resistance. Okay, it's an easy tool for drawing support and resistance, and it's more accurate. You can find it more accurate than you drawing that support and resistance manually by yourself. Okay, but then in this session, in this class, you're going to understand how to use it the right way. Where do you draw it? Where do you draw it? How do you draw it? And how do you position it on your charts? Okay, so that's why this is very important. Now, the levels of a Fibonacci, Fibonacci has a sequence of numbers. That's why I said there's some mathematical numbers to Fibonacci, right? There's a series of numbers. When you draw it on the chart, you will see these numbers. Okay, so what we want to do now, we want to explain what those numbers are, what are the usefulness of those numbers, and the ones we are going to be paying attention to. We are not going to be paying attention to all the numbers. We are going to pay attention to a few of them that are very relevant. So the most commonly used levels are the zero level. The zero level is a horizontal line, which is the start line. Basically, that's the start line, the horizontal line. Then you have another line, which is the 23.6. Now, 23.6%. This 23.6%, you will also see it as 0.23, 0.236 on the chart. Okay, so it's basically the same thing. You see it as 0.236. So it could appear as 23% like on MT4, but mostly on TradingView, most of the time you will see it in percentage. You will see it like this. Basically, it's that number 23.6 divided by 100 because it's a percentage already, right? So that's what it is. Then on the second one, you have 38.2. So 38.2 will also appear at 0.382. That's what you will see on the chart. Most of the time, that's what you see. So it's basically the same thing, right? Then you have 50%, and 50% will give you 0.5. You see 0.5 on the 50% all the time. I'm sure if you've seen my chart, you would have seen me talk about this 0.5, all right? So then there's a 61.8. So the 61.8 too, you will see it as 0.618 on the charts, 0.618. Then there's a 78.6, 78.6. So that will give you 0.786. Okay, so these are the numbers that you most likely see on the charts rather than the percentage numbers. Then on 100, you're going to see 1.00 number. So this is how you see them mostly on the chart. When we get there, you see what I'm saying. Okay, so the 0% is the horizontal line. The 23 points, there's the 23.6, which is 0.236. There's the 38.2. These numbers are, there's a formula for arriving at the numbers. And usually it's just about, it's mostly addition, adding together the previous two numbers. Adding together the previous two numbers is how you get to the other number, right? That's how you get to the next number. Okay, so but we are not going to be bothering about how these numbers are how they arrived at these numbers. That's not important. What's important is which ones are relevant and how can we use them. By the way, these numbers, we are not even calculating them. Okay, we are just using the tool, and then that tool draws these numbers for us. And what we are going to do is that when we go into the chart, we are going to use this. We are going to edit our Fibonacci tool to give us the only numbers that are relevant. Okay, then we have 50%. 50% is a horizontal line, which is basically the middle. 50% is like 50. It's called 50% retracement. So it's like a move happens, and then price retraces to the middle of that move, and then it pulls back from there. That's the 50% retracement. And that's what you will see most of the time price do. You will see price do that most of the time. Most of the time, you see price make a move like that, and then it will retrace back to the middle of the line of the move. And that's 50%. And then you don't have to manually calculate this thing yourself. The Fibonacci tool will do it for you. All right? The Fibonacci tool does it for us. Then we have the 61.8. The 61.8 is also known as the golden ratio or the golden mean. The golden ratio or the golden mean. Now, the 61.8, most of the time is 3/4 of the move. So you see a move go from one point to another. Like I said, we're going to go to the chart and see these things. A move moves from a lower level to a higher level, and then price retraces back to 3/4 of that move. 3/4 of that move, that's exactly what it is. And then price now retraces from there. So you want to now come in and expect to take a trade at that retracement. All right? Then we have 78.6. 78.6 is not a very common retracement level. It's not very common. It's just there on the chart. But most of the time, guys, from experience, I realized that when price gets to 78.6, that move is basically invalid. Most of the time, that move is invalid. So that is no more a retracement. Now, it still happens. There's still one or two pairs that use 71.8, 78.6. There are some pairs that use 78.6 once in a while. An example of that pair is GBP USD. GBP USD uses 78.6 sometimes, not all the time, but it uses it sometimes, right? And GBP USD is mostly the pair that I have seen that uses 78.6 sometimes. The other pairs, Euro USD uses 61.8 most of the time. It uses 50% sometimes. It uses 61.8. And then USD JPY uses 50%. USD CAD uses 50%, right? So what this is telling you now, even though we've not got into the chart, what this is telling you is that how far the retracement goes also depends on the asset you are trading. It depends on the pair you are trading. So this is one reason why it's advisable to have a certain number of pairs as a professional trader or as an aspiring professional trader. There are a few pairs that you should have under your belt, right? There are some pairs you say, okay, I trade this, I trade this, I trade this. It shouldn't be too many. It shouldn't be too many, right? That you focus on and say, okay, this is what I trade. And the reason for that is if you concentrate on a small number of pairs, you are able to understand how they move. You're able to understand how they operate. You are able to understand how they operate, and then that makes it easy for you to know how to use Fibonacci, how to use any kind of asset, any kind of tool to trade, whether you're trading supply and demand, which is support and resistance, whether you're trading whatever market structure, whatever, or even price action, whatever you're trading, right? You'll be able to understand it in the context of trading that particular asset, that particular instrument, right? There are people I know that make a lot of money just trading only USD JPY. There are those that trade only GBP USD. There are those that trade only Euro USD. There are those that trade only gold. There are those that trade only NASDAQ, right? And yet they make money. They make good money from it. And the truth is that they have become so much of a professional trading those pairs, trading those instruments. They have become so good that now they can make a lot of money just trading only one thing. And they make far more money than the guy who's trading so many different things. So this is, I just keep that in here so that you understand that the Fibonacci level that price retraces to is actually dependent on what you are trading. It depends on the pair that you are trading. So I'm going to show us a few as we go on later on in the class. Okay, so the next thing is these levels are considered key levels, key areas where price may experience a reversal or continuation of a trend. So what we said before is that we identify a trend, right? Price moves from a low point to a high point for an uptrend, or it moves from a high point to a low point on a downtrend, right? And then when that move happens, what we are trying to do is that we want to wait for a retracement, a pullback. When that pullback happens, that's when we want to enter the trade. Okay, we want to trade in the direction of the trend, but we don't want to just jump in when we see a massive trend moving. When we see a massive trend moving, we don't want to jump in and just continue. Let's say it's a buy. We don't want to jump in at a very high price to buy. So what we want to do is we want price to retrace, give us a retracement, give us a discount. Then we will now enter with the help of Fibonacci, we'll now enter that trade, and then we'll be able to ride that move and go, right? Okay, so Fibonacci, traders use Fibonacci retracement in conjunction with other technical analysis tools. So what this is showing, what this means is that Fibonacci is so accurate, but then Fibonacci is what you want to use in conjunction with other tools. So what this means is that having an understanding of other tools, having an understanding of trends, how those trends happen, what's the direction of the trend, all of those things matter, right? When it comes to using Fibonacci. But Fibonacci will help you very quickly, right? Even if you don't know very much and you know how to use the Fibonacci, Fibonacci can give you a very high win rate. Even if you're just using Fibonacci merely, it will give you a very high win rate. The only thing is that we will then have to probably pick one or two strategies and stick to them, which means you're not trading everything that happens. You know, you can decide I'm going to trade only in the direction of a trend. When I see an impulse trend, I'm going to then trade. When I see a breakout of a structure, I'm going to trade. I'm going to always mark a point, mark one area and another, and then use Fibonacci to know where I'm going to trade. So Fibonacci can be very effective, even though you don't know very much of other tools. But then in the course of your learning, you want to be able to add other tools to your learning, add other tools to Fibonacci to enable your trading, right? Okay, so it can be used to estimate potential price targets for take profit and stop loss. Exactly. So also, besides helping you besides Fibonacci helping you enter a trade at a very good price, with very good quality entries, Fibonacci will also help you know where your stop loss should be. Fibonacci will help you know where your stop loss should be. We are going to describe this also when we get to the chart. Fibonacci will show you where your stop loss should be, and will also help you with your take profit, especially your stop loss, right? Especially your stop loss. And stop loss is basically managing your risk. We've talked about stop loss before, and we said stop loss is basically managing your risk. You want to decide what percentage of your money you want to risk per trade, and then stop loss helps you determine that. And then you want to be able to know, how do I place my stop loss? Where do I place my stop loss in order for you to have an effective trading? Some people want to make their stop loss very, very small. Yes, you make your stop loss very small is good, but you also want to place your stop loss at a point that makes sense. You see, you don't just want to put your stop loss anywhere so that it can be very small or can be very tight because you don't want to lose money, right? Or you don't want your trade to go against you. No. Right? If you put your stop loss is too tight, the trade can also go against you and close against you. before eventually going in your favor. So you want to know, how do I place my stop loss? Where do I place my stop loss? Right? Fibonacci is going to be very effective in helping you know where to place your stop loss. Okay, so let's get to the charts right now and check up a few things. All right, so we'll start with USD JPY. Let's start with USD JPY. And so now, when you want to use your Fibonacci tool, hold on, let me do something. So first of all, before we go to the charts, let's explain something. So this is a shadow that helps us to dramatize what the chart will look like, right? So this is a move, right? It's going up, okay? So what we want to do now is that, first of all, we are going to go and look for Fibonacci. Look at it. If you're on TradingView, this is where you want to go. This is where you want to go to. So you come here, you click, and then you look at Fib retracement, Fib retracement. So I marked it here with gold. I starred it. That's why it appears here. And the reason why I put it there is so I don't need to always go collect it from this, collect it from here. I just have it have it as a shortcut, so I can always pick it from here. You see the Fib retracement. Okay, so we click on Fib retracement, and what we want to do is very simple, right? We want to be able to pick a swing high and a swing low. A recent swing high and a swing low. And what's a swing high and a swing low? If you were in our previous class, guys, we talked about how that an uptrend is a series of higher highs and higher lows. And a downtrend is a series of lower lows and lower highs. Am I correct? An uptrend is a series of higher highs and higher lows, while a downtrend is a series of lower highs and lower lows. Okay, now this is an uptrend because we are having lower, we're having higher highs, right? Let's mark it and show. So we see this is a low right here. Then we see another low here. This low is higher than this, so that's a higher low, right? Now on top here we have a high, we have a higher high. Okay, so this is how you define an uptrend. If you're not clear with this, please go back to the chat, go back to the group, and watch the video of the last class we had. The last class I think was on Wednesday or so. We had a class where we talked about, we dealt with this very detailed. All right. So if you can't find it, or you're new to the group, please indicate in the group. I will drop the video again. All right. I'm aware that lots of people are joining this group, joining our group, our Signal group for recently, like a lot of people joined yesterday, today, and all that. So if you just joined, you indicate in the group so that I will get the video and post it there again for you to watch. So we basically dealt with trends, uptrend, downtrend, sideways trends, and all that. We dealt with that a few days ago, right? So now when you want to pick a swing high and a swing low, what you are looking for an uptrend is a recent high, a recent higher high. To the group. All right, no problem, Shay. I will post it. I'll post the video in the group. All right. So what you're looking for in order to pick you want to know how to draw your Fibonacci. First of all, you want to identify your most recent swing high and swing lows. And swing high and swing low for an uptrend is your most recent lower, your most recent higher low, and your most recent higher high. For an uptrend, your most recent higher high and your most recent higher low at that point. At that point, because right now let's look at this. Hold on. I want to show us something. Okay, so let's look at this right now. Currently, right now, we have a low here right now. We have a low here. We have a high here. We have a high here. Okay, So now we are expecting, we are dramatizing now as though this is actually price right now, where price is, okay? So now when you see, this is the most recent lower high. This is more recent lower high, right? This is most recent higher high. This most recent higher low, sorry. This most recent higher high. This is most recent higher low. Now, when you come on your chart, these things are very easy to see, right? They are very easy to see. So what you want to do is that we want to pick this area and draw your Fibonacci there. When you draw your Fibonacci, what you're looking for is this. Your price has moved from this area here to this area here. This point, this lower high to this higher high. That's what price has moved. Now, you see price is pulling back now. How far will it retrace? Because we can already see that this is an uptrend. We can see that this is an uptrend. Now, what do you do in an uptrend? You find buy opportunities in an uptrend. But then that's where Fibonacci helps you. Where do I enter? I already know that I'm going to buy. I already know that this is a buy. So where do I enter now? That's where you take your Fibonacci tool. You take your Fibonacci retracement, you place it here, and then you draw it to this point, to this top here. So you want price. Let's zoom it out, make it bigger. Okay, so you will notice now, guys, you notice on this particular Fibonacci, you have 0.5. Can you see 0.5 there? 0.5. You have 0. We talked about 0, right? We talked about 0. We talked about 1. We talked about 23.6. We talked about 32.8. Then we talked about 0.5. Then we talked about 0.681. So what I have done here for my particular Fibonacci is that I have edited it in such a way that I'm only using the relevant Fibonacci lines. So on this Fibonacci line now, I'm using 0.5, I'm using 0.618, I'm using 0.786. All right, so before we go on with this, I want to show you how Fibonacci will be if you're using it for the first time, right? So let's do that. If you're using it for the first time, this is how it's going to be. I want to show you this so that you won't be confused and think that your Fibonacci is different from mine, right? So you're going to see some things like this. Then you're going to see this. Most likely you will see all this as well. Okay, so you see your Fibonacci now. You see it's much different from what I just showed you now. Much different. So when the Fibonacci comes, when Fibonacci 2 comes out like this, when the Fibonacci 2 comes out like this, what you want to do is that you are not dealing with the entire Fibonacci numbers. We know that there's 0. We know there's 23.8 there. We know that there's 32.6. We know that there's 50. We know that there's 61.8. We know that there's 78.6. We said before, the two most important ones are the 0.5 and the 61.8. Those are the most important ones. Then we can add the 78.6 because that one we said before that GBP USD, that's useful when you're trading GBP USD sometimes. Okay, so we will stick with those 3 numbers. The ones that have to do with the 23.6, the 32.5, we are not dealing with those ones because those ones are premature retracements. So we will remove them from, we will edit our Fibonacci tool and remove those ones so that we are not looking at those ones at all. Okay, so the way to look at them, the way to do it is that you just click on the Fibonacci. When you bring it out for the first time, most likely it looks like this. So what you do is you click on it, you see where you see this settings. You go to settings, you click on settings, then you remove the ones that you don't want. I don't want 0.236. I click on here, I deselect that one. I don't want that. Then I don't want, you see there's 38.2 there. I don't want 38.2 or 0.382. I don't want that one. Then there's the 1 point something. This 1.618 is the one beyond 1. So when we're talking about the Fibonacci here, we talked about 1. We said we said 23.6, 38.2, 0.5, 0.618, 0.786, then 1.0. Now 1.6 is now another level beyond 1.0. We don't want to do that. We don't want to have that on our chart because it's going to make our chart look very clumsy. We are just looking for a point of retracement so that we can get into our trade, right? So we will remove that as well. Then 2.6, we will remove that as well. When we remove that, what do we have? We have 0, we have 0.618, we have 0.5, we have 0.786, then we have 1.0. We click OK. So when we click OK, this is what we are going to arrive at. Now, your colors may not look like this. Also, you can change colors too. You can adjust the colors. You see where these colors are? You see, you can change these colors here. Look at where to change the colors. I'm saying this because when you come to the chart and you do this, what I'm showing you now, the colors may look a bit different from the one I have on the chart. So I have edited the colors a bit. You can play around with this. If you're on TradingView, whether you're on your phone or your laptop, doesn't matter. You can play around with this. Even on MT4, you can do this too. On MT4 or MT5, you can do this too. You play around with the numbers until you find a number that you play around with the colors, sorry, until you find a color that resonates with you, that you like, right? So when you've done that, you click OK. Then you have your colors come out like this. But most importantly, what you want to see 0.5, you want to see 0.618. This is the most important area. This point between 0.5 and 0.618, that is the most important. That's what will work for you for most of your retracement trades that you're going to be doing. For most of the trades that you're going to be doing with Fibonacci, you are going to be working with 0.5 or 0.618. 0.5 or 0.618. Okay? All right, so let's delete it. Let's do it again now. So we are going to take this low, then we are going to take the recent low and the recent high. The recent low and the recent high. That's what we're going to draw. We'll take price from the recent low, we'll take it to the recent high. Or we'll take it from the recent high and take it to the recent low. And then what we are looking for now is which point along this whole move now gives us, which point does it give us when price gets to 51.8, the 50% or 61.8, where does price tell us to enter? Where does price give us, at what point is 50% telling us to enter the trade? Okay, so let's do that now. Let's come here. We'll put it here, and then we draw it up. We draw it up. So we take it from this bottom, we take it to the very top of the wick. So can you see now where price got to? 50%. When price gets here, this is telling you now, guys, this is telling you that this is the place where you're supposed to be entering the trade for a buy. We already know that this is an uptrend. At the 50%, that's where you are waiting to enter for a buy. Now, price can also get to the 61.8. Price can also get to the 61.8. So what you do is this. You have to, if you want an early entry, enter at 0.05. So you can see now, it's not only giving you 0.5, the 0.5 level. This 0.5 level is basically the midpoint of this move here. This move from this bottom to this top right here, that move, the midpoint is the 0.5. So the 0.5 is where you will see a lot of reversals happen. Most reversals happen at the 0.5. But a few times, like on Euro USD, you might discover that price will move to the 61.8 too. Price will move to the 61.8. So here's what you do. If you enter this trade at 0.5, you want your stop loss to be below the 61.8. This will not be your stop loss from here to here. Why? Because if price gets to this 20, if price is going to choose to get to 61.8, there's no way it's going to keep coming down. Because if price keeps coming down, then you know that you are wrong. Because remember, there is no tool, no analysis that works 100% of the time. in the market. No tool, no analysis, nothing that works 100% of the time. It just doesn't exist. And guys, you don't need to win your trades 100% of the time to make money. What we have said is that all you need is a good risk to reward ratio. What you need is a good risk to reward ratio. If you have a good risk to reward ratio, you can win, you can take 10 trades and you make profit on 5 of those trades and lose 5 of those trades, and you are still in massive profit. You see, so your risk reward ratio is what determines how profitable you are, not even your win rates. But the reason why we want to get good is that we want to make sure our win rate is very high, yet we are using a good risk to reward ratio. Because you don't want to say, okay, I know there's only risk to reward ratio that is going to determine my profitability, so I can just come into the market and enter anyhow. You don't want to do that. You want to also become good at analyzing the charts, analyzing the market, while also using a very good risk to reward ratio. Okay, so now when you enter your trade at the 50% level for a buy, you put your stop loss at under the 61.8. For most pairs, you will discover that price will reverse from here. You reverse from here. It doesn't even go, it won't even go to the 61.8. But even if it gets to the 61.8, you know that price also should reverse around the 61.8. If it doesn't reverse around the 61.8, then that tells you that this trade is probably not right. And that's the reason why your stop loss is there. Your stop loss is there to make sure that you come out of any trade that is not the right trade. And so you don't have to bother about this, right? So just make sure that this, from here to here is your stop loss. Make sure that your risk reward is very good. Maybe your risk reward is 1 to 2, 1 to 1, or 1 to 2, or 1 to 3. When your risk reward is good quality, the few trades you will lose will not mean anything to your account. When you come into your account, you do not even know, it doesn't even look as if you're losing, you lost any trade, because your account is in profit, right? Okay, so let's go into the main chart now and look at this and determine how we will trade. Okay. So this is USD JPY. Let's see if we can see a recent move that we could have traded with Fibonacci. Okay. Okay, so let's pick something now. Let's pick this move now. Now, remember what we said, the recent, this is actually from here to here now. Watch this. From this area now, okay, to this area now can actually be seen as the recent swing high and swing low. The recent swing high and swing low for this particular, for Euro USD JPY right now. Okay, now that's for the 1 hour charts. Remember, we have different charts. There's a 1 hour chart, and this works whether you're trading on a lower time frame or a higher time frame. It doesn't matter. It works whether you're trading 4 hour or you're trading 1 hour. It doesn't really matter what you're trading. Even when you're trading daily, it works still, right? It works for any one of them. Okay, so let's go to 4 hour. So when we go to 4 hour now, you discover that this is this recent swing high for the 4 hour, not here. Okay, so let's go to 1 hour now back. So let's draw our Fibonacci. Let's take this point first. Let's take it from one level to another. We're going to take this level. This was a previous low. This was a previous low, and this was a previous high. Okay, this was a previous low, this was a previous high. This is the current low, this is the current high. So if you were trading at the time this was forming, this formation right here, okay, this one, let me mark it well so you can see. If you were trading at the time this formation was happening, if you were trading at that time, this was where you withdraw your Fibonacci at that time. So let's do that and see how that goes. Okay. So let's take Fibonacci. We'll draw. This is the swing low. We talked about that just now. This is the swing low. We'll take the swing low, we'll take it to this stop. Okay, so let's zoom and see where did we see the 50% retracement? Where is the 50%? Where's the 50%? So look at the 50% right here. See the 50%? So you see how price broke out like this, came to the 50%, and it bought from the 50%. This move, guys, today, this move alone did over 170 pips. This move today did over 170 pips. This move you see right here. And this was just a simple setup you would have done with the Fibonacci movement. Right? Okay, so now that is for that. Now let's use the current high and the current low. This is the current swing low. This is the current swing high. This is the current swing low. This is the current swing high. Like I said, if you're not very clear what that is, it's still basically when we talk about trends. We said a trend is a series, an uptrend is a series of higher highs and higher lows, right? And a downtrend is a series of lower lows and lower highs. And that is what that's what we mean by swing highs and swing lows. It's the same thing, right? So we won't have time to delve more into that right now. So let's use Fibonacci here now and see what this Fibonacci, what it will give us here. And see where would we have entered this trade now? Where would we enter this trade? We can see price move from this point to this top here. From this point, price moves to this top, right? So where would we enter? We know that, okay, this is supposed to be like a buy trade. Because what we are expecting is a retracement, then we'll not buy. So where is this retracement going to get to for us to buy? So let's see. Let's put our Fibonacci 2 here and draw to that top. See, we drew it to that top. Okay. So where is the 50%? Watch this, guys. Where's the 50%? The 50% is here. This is the 50%. Let's mark it. This is the 50%. You see? So price, first of all, retraced from that 50%, but it has not started going up. Then this is the 61.8 retracement. So you can see now price went through the 50%, and then is coming to the, is getting to the 61.8 now, and is retracing from the 61.8. And I believe very strongly that this price is going to buy from here. Is going to probably start buying, and then to buy from this point here to this top here. So what you need to do now, if you're entering this trade right now, this is Saturday, you don't need to enter any trade. We're not entering this trade. We are just studying right now. You're going to enter this trade. And if you've entered here already, if you've entered at this 50, you're currently in a little drawdown, but your stop loss is going to be under this point, bottom here. That's what your stop loss is going to be. Your stop loss is going to be below the 61.8 because price has already even almost gotten to the 61.8 right now. That's almost gotten, but you can see it's pulling back. It's pulling back from the 61.8. So very likely we are going to see this buy resuming. Maybe we can watch this and look at this by Monday and see what exactly happened here. There's still between now and the end of the day. It's not probably the market should close in about 3 hours or so. There might still be some moves happening here. But when market opens on Sunday night, we might see this move happening here, this buy move happening here. I predict that this buy is going to buy from here. But even if it doesn't buy, we have put our stop loss under this 61.8. And here now, what did we do? We did not even do any special, we didn't do any analysis here. Fibonacci just gave us where we should enter this trade. And like I said, when your risk to reward ratio is in place, you don't have to get what if this setup doesn't play out. If it doesn't play out, that's why you have your stop loss there. Your stop loss, it hits your stop loss and you are done. You move on to the next trade. As long as you are able to, if you lose $5 on one trade and you enter the next trade and you make $10, you are in profit. That's the way to look at trading. Meanwhile, you just took 2 trades, you lost one for $5, you made $10 on one. You are now in profit to the tune of $5. That's the way to trade. That's the way to look at trading. right? So that's the thing. So that's the reason why you don't want to hesitate when you find a setup where when the tools you are using gives you a setup and you say, okay, let's enter this one. You don't hesitate. What you need to do is calculate your risk per trade. What am I risking on this trade? I have a $1,000 account. What am I risking on this trade? Let's say I want to risk 2% on my account. That means I'm risking $20. I'm risking $20 and my goal is to make $40 on this trade. I'm going to risk $20 and then once this trade goes in my favor, I'm going to make $40. That's the way to think about it. So if that trade doesn't go well and you lose $20, fine, you move on to the next trade. Then you risk $20 again on the next trade. When you risk $20 again and that one goes in your favor and hits your take profit of $40, what have you done? You have made a $20 profit. You recovered your $20 loss that you made, the loss you made on the last trade, and you made another $20 profit. Now you are up 2% on your account. So that's the idea. That's the way to trade. That's the way to trade, right? So let's look at what other pair can we study now. Let's look at Euro JPY. Let's look at Euro JPY. Okay, I already drew this. I drew this Fibonacci. Let's draw it again so that you guys can see the points. Okay, so now what is the recent high and recent low here? The recent high and recent low here are these. This is the recent low. This is what we're going to take it from. This is the recent low. This is the recent high. So we're going to take our Fibonacci and draw from this area to this area. Then we'll now take note of the 50% and the 61.8, and then that's where we're going to trade from. We know that this move is a buy move. We know that we want to buy. Where are we going to enter? That's where the Fibonacci tool is useful. Okay, so let's go now. We take Fibonacci, we come here, we place it here, and then we draw it. We just pull our hands and we go. Now we can see, look at the 50% here. So the 50%, what I will do sometimes is I will usually box the 50% and the 61% together. I'll box it together like this, so that I know that price can come into this particular box, into this particular zone right now. I know that anywhere within this zone, anywhere within this blue zone, is where price is likely to get to. So I'm okay with that. So what I'm going to do is that most of the time, I want to enter very early. I want to enter at this top right here, so that I don't miss the trade, right? Sometimes we have FOMO. FOMO is fear of missing out. This trade is so sweet. I don't want to miss the trade. You can enter at the 50%. And if you're on trading view, the 50% also gives you the entry price. Right here now it's telling us 140.400. That's the entry price for the 50% level. Okay, so we can enter that trade, but where is our stop loss going to be? Our stop loss is going to be below the 61.8. Below the 61.8. This is where our stop loss is going to be. It's going to be there because we expect price to come into this zone. We expect price to come into this place before it now eventually buys. You see, so we put our stop loss below 61.8 so that our stop loss doesn't unnecessarily, market doesn't unnecessarily hit us out of this trade when the trade is a good trade. But in the case that price doesn't go, this trade doesn't go well and it hits our stop loss, we are not bothered. We know that we are using a good risk-reward ratio. I go back to that again, risk-to-reward ratio. Once you're using your good risk-to-reward ratio, you lose one trade, you make it back on the next one. You lose one trade, even if you lose two trades, when you get one trade, if you lose two trades and you have $1,000 and you risk $20, which is 2% on one trade and you lose, okay? You risk on another one and you lose, for example, what you've done, you lost $40, right? Now, when you go on the third trade and you risk 2% again, which is $20, and you make $40, what have you done? You have recovered your loss from the previous two trades. So now you enter yet another trade and you win again, you make $40. Now you are up 4%. That's the way to trade, guys. That's the idea. That's the way to trade. Okay? To what level To what level below the 61.8 can you place? Any point below is okay. There's no definite place to place your stop loss. There's no definite place below the 61.8. You can pick any point below the 61.8, but don't let it be too close to the 61.8. Shift it a bit forward. So just in case price hits the 61.8 and just doesn't close and just close you out and hit your stop loss. So you want to put it just somewhere below the 61.8, a comfortable place below the 61.8. You see? So you just want to get a comfortable place below the 61.8 is fine. There's no definite way to determine that. That's only up to you to determine. Any place that's just a little bit comfortable for you, that's below the 61.8, that's where you want to stay. That's what you want to place your stop loss. You know, so that's discretionary. It's up to you to do that. But I'm sure you won't get that wrong. Right? I'm sure you won't get that wrong. So that's basically the way to do. So you can do this. We can do this also for the dollar index, right? So we won't go too far anymore right now because we don't have much time. I want to take one or two questions. Well, let me just quickly look at this dollar index. Let's see if we'll find any point here. Let's see if we'll find any point. Okay, let's pick this area now. Let's pick this. Let's pick this. This is swing low. This is swing high. Okay, let's see if the Fibonacci can give us anything here where we would have done this trade. This trade has already passed, guys. So, well, let's just see. Would we have worked too on this the dollar index? Okay, good. So what do we see here? What do we see here? We see that price got to this 50%. You see, this is the 50% right here. This is the 50%. The 50% is the green line. Okay, so you can customize this to be any line for you. Okay, for me it's at 50. You can see how price got to this 60, 50%, and eventually made a huge buy. Okay, it came there several times. That doesn't matter. And at this point now, where your stop loss would have been, somewhere here. Right? Your stop loss would have been somewhere below the 61.8. This is where your stop loss would have been, under here. You see, price didn't come to your stop loss, and then it moved up. And from here to here now is your risk. By the time you extend your risk up like this, you can already see that this is more than 2x of your risk. This is more than 2 times your risk. That means on this trade right now, you could have done 1 to 2, a risk to reward ratio of 1 to 2, and your take profit will be hit on this trade. You would have made 2 times your risk on this particular trade right now. Okay. All right. So let's ask a few questions. So MT4 for MT4 and MT5 is the same thing. You find the Fibonacci 2 here. You find it on top there. Sorry, I'm trying to get this thing to go up. So Fibonacci 2 is here. When you click on it, you see it's selected. You can then use it like this. You can then use it like this. You see? You can use it like this. Now, I am the one that have done my own customization like this. That's why you are seeing only 50, right? You're seeing only 50. But when you click on Fibonacci properties, click on Fibonacci properties, this is where you add and remove. This is where you add and remove. Okay? This is where you add and remove. I am the one that have customized it. I can add the 23.5, the 23.6. I can add it again right here. So where you say add, I can delete as well. So I'm the one that customized this the way it is. That's the way it is now, right? Guys, we are out of time, so I can't go into this right now. So what I'm going to do is that next week, probably on Monday or so, Monday or Tuesday, I think Tuesday, I will do another video. I'll do another video to help you so that I will take this, take the Fibonacci back. I'll take it back and then customize it from scratch so that you can know exactly how to use it. So I'll do that probably by Monday or Tuesday, guys. All right. So please, pardon me, we'll end the class right now. so that